Hey everyone, stick with the us versus herd. If it's your first time here, if you like the content, hit subscribe. If you want to get notifications from when we go live, tap the bell. And if you want to join the UVH fam, our community, links are below in the description to our Discord and our free options trading group on Facebook. If you're here right now, say what up. What's going on, Billy Jeff? We have the S&P's up 6, Dow's up 79, sorry, and NASDAQ is up 26 currently. Yo, Kelly, Keith, how's everyone doing? Edwin, Ryan Reworks, what's going on? Aaron. So, looks like we are back at it. So, a couple things going on this morning. I have a couple of positions on. Well, let me walk you through. I didn't do a video last night or yesterday. Just need a little break. Yesterday was a lot. Not in terms of trading. I was actually gone for most of the day yesterday, but it was just it's been I want to say it's been a hard week. But let me show you here. Okay. So yesterday I did put on a earnings position. Yesterday I did put on an earnings position for Intel. Pretty tight iron condor here. Show you what I have. So I sold the 63.5 calls and puts, bought the 60 put, bought the 67 call. Yo, Rob. So my break even, went above, like my break even, I did the math with a little bit of IV crush, was 66.50. After 66.50 to the upside, I'm going to be start losing some money. Now I did get $2.49 in credit. It did cost me, max loss is $1.01, so the maximum I can lose is $101. So right now we're right at the break even. I'm probably just going to exit this position. I do have next week's expiration, but right now we're they had Intel had pretty good earnings. However, they did say they did raise guidance. Intel's giving us mixed signals. So they came in at $1.52 per share, topping the $1.25 estimate. Revenue was higher, almost $1 billion higher in revenue. Intel's forecasting first quarter earnings $1.30 per share and revenue of $19 billion, which I think seems kind of low after exceeding expectations that much. But so Intel's doing well. I don't know if it's close to all-time highs. I mean, Intel's been around for a minute. Let's see, what's the highest Intel's ever been? So okay, so way back, when is this? 1999. It was $75 a share, and then never came back until now. Which is kind of crazy to believe, that if you think about it, how overpriced the tech stocks were back then. You know what I mean? If now, 20 years later, those stocks are still not even the same price. I mean, the highest Intel's ever been was 75. It's 66 right now. It's taken 20 years, man. I was only 20 years ago, so I was only 14. I wish I knew how to trade, but I wonder what it was like. But I think it was way different in terms of trading because they didn't have the technology we have now. So the entire atmosphere. Right now, we're able to have like an entire community. Like, I'm able to interact with all you guys here live right now, no matter where in the world that you are, no matter where in the world that I am. But it's interesting. Go Tobin. KO and snap options for me, probably take some profits. So I'm looking to get out of Intel, probably break even. I'm not gonna try to squeeze that out. Disney, I did put a Disney play on yesterday, so Disney's a little bit complex here. Well, not really, but I played some defense here. So I did on, when was this? So on Tuesday, I bought the 144 call in hopes that it runs up to earnings. It dropped a little bit, so then I bought the 142 call just to play some defense. I was starting to make some money on Disney a little bit on the 142 call, down on the 144 call, so I added the one, instead of averaging down the 144 call, I bought the 142 call. Now, Edwin, to get to Disney, it did shut down. So they shut down Shanghai Disney to prevent the spread of the coronavirus, protect the people. Will be closed until further notice. So it's going to be a problem. So I might just cut. So I might just cut that position. I mean, I probably should have thought about that, but I really wasn't thinking about the Disney Shanghai. I was more concentrated on Disney earnings coming up. Yeah, I mean, I agree with them closing it. I have no problems with them closing it. The only problem is that impacts my positions right now. So, what do they say here? Yeah, in response to the prevention and control of the disease outbreak, and in order to ensure the health and safety of our guests and cast, Shanghai Disney Resort is temporarily closing Shanghai Disneyland, Disneytown, starting January 25th, which is I think they're already in January 25th. So we will continue to carefully monitor the situation and announce the reopening date upon confirmation. So they're on lockdown right now. Disney did bounce at the 140 level. Yesterday came up to 142.50, and that's why I did add the 142s up in here when it was hitting like 141.80. Today now I'm probably going to be down a little bit of money on those, so we'll see what happens to that. You know, Andres, if you're just joining us, say what up. If you do me a favor, hit the like button. I'd really appreciate it. You think BA is going to hit 326? Aaron, I think I don't want to short Disney coming up on earnings. So I think it would be better just to hold and see what happens. Or I don't want to short Disney ahead of earnings, and they're going to be reporting their first quarter of Disney Plus. So, Andres, thanks for the like. Miguel, thank you. What's going on? So, I don't want to short Disney. It's not a stock to short right now, but that's a problem for the revenue, which I think right now. I guess it depends on how long it's shut down for. That it will impact their revenues. So it depends on how long. If they're shut down a couple days, not a big deal. Shut down a couple months, pretty big deal. So we'll see. We'll see what happens. I'm gonna try to get out of this position alive. Hopefully we can get a spike or something, and I can take at least break even at this point, because I want to break even on. So I'm down $94 right now. So we're gonna be down over 100 on that position at the open. Shake Shack I still have as well. Shake Shack has been chilling. Yeah, Shake Shack has been chilling, which is good. It's been kind of showing. I've been swing trading this. I've been holding this position for a couple days, and it's been showing some really good momentum here, holding above 70, which is nice. So I'm just waiting for it to make one more push. We need one more push here. We'll see if it happens. It looks like it will. It looks like it wants to, but as you can see, volume has died down quite a bit. However, volume is still way higher in the 70s than it was down in the 60s. So I'm keeping an eye on that. So I'm looking to, if we can get a nice spike on Shake Shack today, I'd like to get out and then buy the dip on it again. And then on Boeing Let's see what Boeing is going to do here. Boeing is interesting. So I think that I think right now it's really hard to. I think people are having a hard time pricing Boeing, and I definitely think that, like I was saying this on the video or the live stream, was it yesterday? That a lot of people had stops like right down in here, and they just took all those stops out, and now they're bringing it back up. You know what I mean? So right now, AVGO. I'll take a look at that in a second. So Boeing, they took out the stops. Now, for some odd reason, Boeing, the way to trade, I've been trading it because I guess it's been predictable. Not unpredictable for when they drop the news because they got screwed on it this week, but afterwards, after the news drops, Boeing seems to be very predictable. People keep shorting that news, but Boeing keeps ripping back up. So, the bad news kind of seems priced in at this point. Yes, I know that it went from 446 down to 300, but if you look at, let's go to the 2-year here. If you look at why that happened, though, is because we had the trade war scares, and then I think people were just getting squeezed. I don't think it ever should have probably hit like 446 if people weren't getting squeezed so hard from shorting all the trade war stuff back at last 2018, fall of 2018, winter 2018. So Boeing is on watch for sure. It probably can. I think it probably will hit 326 if this momentum keeps up. I mean, I think that it's probably going to come back to 340 at some point. Probably not today, but it could. It could. Hopefully it does today because I'm freaking max loss on my 330. I have the 332.50 calls. So let's take a look at AVGO. AVGO, yeah, it's up pretty nice. Broadcom. So yeah, they had the Broadcom had the deal with Apple to supply them with some parts that potentially could be a $15 billion deal for them. I don't know if here CNBC did mention it in their morning little briefing here. So AVGO, Broadcom struck a deal to supply Apple with wireless components for Apple products through 2023. Estimated transaction worth $15 billion. Apple only currently accounts for 20% of Broadcom's annual revenue, so that is good. And it's through 2023, so nice three-year contract there. I got one put credit spread for today, 3 more for February 14th. Oh yeah, I do have also. I did put on a very small position on Amazon yesterday, which was the I put a put credit spread on. I mean, very small, $1.28 credit. Kind of going up into next week. I sold the 1885 put and bought the 1882.50 put on Amazon. So it's currently 1890. It closed a little bit in the money. So this is what my position looks like. But Amazon, what I'm looking for, so Amazon has earnings next week, and I do think that they're going to exceed expectations just because they had really strong holiday sales and all that. So I'm thinking that it's going to probably run up in the next week here above 1900. I'm looking to get out. Hey, if I can get 50% credit on that spread, I'll get out today, and then reload a spread on some if we get any dips today. I think we should be getting some dips. It's kind of mixed. People don't. I think the market is kind of mixed right now. I think they're scared of the coronavirus, but at the same time, they're still buying the dip. Like yesterday, there was we had not the biggest down day, but it was a bigger down day than normal in the last few weeks, and SPY ripped down to 329, but immediately bought back up to 332 almost. If we look at S&Ps, dip was big, but it bounced right off of the 3300 mark and right back up. I mean, literally, if we zoom in, literally came down to 3301.60, bounced back up. You know, so I mean, the problem now with shorting those drops is people so bad want this to go from like 330 down to like 3100 or 3000 or something crazy like that, even though we've been kind of, we take the stairs up, the elevator down. So bears, the higher we go, they get more hungry, they get more aggressive, and when they see some weakness like this, if you're looking at yesterday, we gapped down, and then especially when let me zoom in here. So we gapped down yesterday, came back up, and then it failed right up here at where it opened, where it opened up with like 33.15, 33.16. It failed, tapped that perfectly, started to reverse. They probably layered in some more shorts, thinking it was going to now break this 33.05 area. It did not break 33.05, and it continued back up. So bears get more aggressive, but the more aggressive they get, the more likely they are to get squeezed. The chart is not in their favor right now. Chart is not in their favor. I mean, if you want to play puts on a day trade, but swing trading is definitely difficult to time. I mean, we've had some red days, but the trend doesn't really mean anything in terms of the trend. I mean, how long can we go up for? I mean, that's the thing is, people, with our account sizes, are not going to be able to outsmart the market. We're not going to be able to make an impact. I mean, we're not taking billion-dollar positions and moving around money in that way. Even at a higher level, most retail traders are moving $100,000 a day, which is nothing. I mean, there are some traders that trade higher than that, but traders taking $20,000, $30,000, $50,000 positions not gonna move the S&P. Is not gonna move Amazon or Netflix or anything like that. I only short scalp on my long position. My weighted bullish to risk shorting regularly though. Baba bought Disney Call 2 yesterday before close 2 weeks out. Hold or I might bail. Yeah, we'll see. I don't know. Let's look at Baba. So I was liking Baba yesterday. I didn't trade it though. So Baba, I was liking if it came back down to the 216 level bounce. I did like that it bounced off that level there. I was looking for it yesterday to break 220. It tried and it failed, and I just didn't put the position on. I wanted it to break 220 to see if we can reverse and kind of head back up to like 222, 224 area. However, looks like it gapped up pre-market, but now we're back down to 218. So I think the Chinese stocks are going to have a problem because of I think that they're going to be impacted by the coronavirus and all the news headlines. I don't know if Alibaba per se is going to be impacted by the coronavirus, but I think just because it's a Chinese stock, it's kind of being brought down in that way, So I think right now I'm probably going to stay away from Chinese stocks. I mean, Alibaba for a long time was my moneymaker, but I kind of got away from it in the last 6 months or so, and just kind of, it's hard to read. Netflix, do I think it'll run again? So I think so many people got squeezed yesterday. They were shorting. This looks like a squeeze up. I do like that it closed up at 349 right in the middle of this gap, so it does look good for a good gap fill. However, I don't like to buy this type of momentum for like a swing trade, because a lot of times you do get a little bit of a red day, a little bit of pullback, and then it goes back up. So I wanted to see what was going to happen today, since I missed this action yesterday. I mean, the two charts yesterday that I definitely regret missing was BA and Netflix yesterday. I mean, amazing, amazing. But Netflix, I would expect a little pullback at open before going back up. But I mean, you can't deny the chart. I don't think it's gonna have another $20 day though. I mean, if you look here, I mean, when was the last $20 day this year? So this one went from 289 to 311. This was back in October. Had another $20 day in October as well, but we haven't had a $20 day since October. So the likelihood of having another $20 day, just because something happened doesn't mean that it's going to happen again that quickly. That's where a lot of people lose money. Is just because something happened. Let's say you made a lot of money on Netflix. People think it's going to repeat tomorrow. And sure, it can. Like on Tesla, it has been repeating. But eventually, it's not going to. And it looks like momentum's kind of slowing down here. It had some great momentum. Looks like they're just having wide swings in the price action right now, but which inflates the premium. But eventually, it's just not going to work. And someone's going to give up all that they made on this run. They're going to give up all their gains in one drop. In one bet, all it takes is one trade to lose all your gains. That's why you got to manage. That's why you have to manage risk. I mean, sure, people have made millions off this run, Tesla, and I've seen a lot of traders. I have been staying away from Tesla just because I don't know how to value this. I mean, I do think that Tesla's staged for growth in the future and all that, but we need some basis lines to trade off of. But I do think if things stay positive now, I do think that it will. I do think that it'll probably go 360, 350, 355 area, and then we'll see. Up here at the 385, 370 level, it was kind of hanging out, kind of getting tired. So I don't know if it has enough momentum to break through this to 400 area. I don't know if it deserves that. So we'll see. Dollar Tree. DLTR, David. Oof. When's their earnings coming up? March, not till March. Yeah, I mean this is just fading. It's just fading. Let's see where we can go for this, for the 2-week lows. Really ideally next stop is the 80s, low 80s right now. It doesn't look good. It broke 88. If it's going lower, is it lower this morning? I was hanging out at 88. I mean, it could reverse here too. It could. It did touch 88. It could reverse. It's back at 88.20. So I mean, it could reverse here. I would probably, if you're thinking about being bullish on it, like for me, I do like these type of setups. What I would do is I would put a strangle on for sure, a few weeks out. But I would skew it either bearish or bullish. In this case, depending on where you are, bullish or bearish. So I would buy, for Dollar Tree, let's say I was bullish on it. I would probably do like February 7th, and I would probably buy the 88 put, and I would buy the 88 call, sorry, and I would probably buy the 85 or 84 put, probably the 85. Something like that. Actually, probably. Yeah. I would probably do that. That would probably be my trade. Set up like that. Actually, not a bad idea. Actually. Starbucks. I got six minutes till market open. I don't know why I'm typing Starbucks in. Let's see where they're at right now. They're at 93. Yeah, man. Yesterday, Starbucks had a big day, got saved as well. Looked like it was gonna fall apart, and then it came back up. So I'd be very mindful because it's been getting stopped out here at like 94. It means that it touched above 94. We need it to hold above 94 because it currently keeps getting rejected. Got rejected up in here, got rejected up in here, and now we're back. We're back. So it needs to show some. It needs to bust through that 94 there on Starbucks. If you didn't catch the dip yesterday, you should wait to see if we can get through 94. You know, probably start putting a position on like 94.50 area. GB, DFS. If you guys do me a favor, hit the like button. The market opening in 5 minutes. Discover. Yeah, they had earnings. So they're at 78.5. Expected move for them was only 250. And they're at what, 78? Oof. Oh, good thing I didn't sell premium on Discover, because that would have been a disaster. So it's at 78 down here. You know, probably going to retest the 75, 76 area. If it can't hold, probably 70. You know, definitely going, unless there's some buyers in the morning, always wait for price action, just because the price action after hours is one thing. You always want to wait till the market opens to get some volume in there and see what the real price action is, because you can see there's like no volume here. But we'll see if people want to get in or if people want to bail. All right, so we got 4 minutes to market open. We have S&P's up 6, Dow's up 85, Nasdaq up 26. Nasdaq's been strong lately. Intel, INTC. See where we're at. So I'm still at break even. Probably not gonna be making money on Intel. Probably gonna close out just break even. But it was a low risk trade, high credit, so can't complain. Might make a couple bucks, but probably just cover commission. We'll see what happens, what that opens up at. But you know, that Dollar Tree position is not bad. And then I'm gonna be looking to try to figure out what I want to do with Disney. I'm gonna hold Disney for right now. Keith, beans, I'm actually starting to make money now again. Not necessarily make money, but make back some of what was lost. So now that soybeans is touching near 900, I have the 880 put on soybeans. So I actually grown to after holding this position, I've actually grown to like trading these soybean futures. And not that I've been actively trading it. Having a position on it has forced me to monitor how it moves and looking at it in a different way and visualizing how to make money, how to lose money. And you know, if you're looking at this chart, this is actually a very good options trading chart here. So I'm not hating. What I need though, I need soybean futures to dip below 900. Then I'll be good. I'll be right. But I'm starting to make some of the money back, so that's good. Bad news is it's kind of slow. The soybean futures are more. It's kind of a slow go unless you're buying closer in the money. But because I bought such a wide strangle, it's taking me a while to get there. But I do have 28 days left, so we're in the zone. If we get a couple more drops on soybeans, things will be good. But yeah, I have grown to like I was trading S&P futures, I was trading soybean futures. I have grown to like trading futures a little bit more. I mean, you do pay a little bit higher commission. So like going in, going out, going in, going out. It's better if you're gonna do that. It's better to trade the options on like ETFs and stuff like that, like SPY or SPX and stuff. But you are able to take advantage of moves. The nice thing about futures, though, you're able to take advantage of moves like after hours, like when we had the Iran attack and all that. I was able to put a position on after that happened. I didn't have to wait till the market opened the next day. I could just put a position on, and so that was nice. We made some money on the S&P futures when we had the Iran attack. So it's nice that the futures are open during those off hours that the market isn't open. But the thing is, low volatility futures are normally pretty flat after hours, but when they are popping, you can make some decent money. All right, so we got markets open. All right, let's see how bad things are. All right, Intel, we are Down 6, down $5 on Intel. I'm gonna try to just close this out. All right, so I got filled. All right, lost $30. I did lose $30 on Intel because it was spiking. It's okay. Shake Shack, we're up. Let's see what we're doing here. Let me show you my positions. Okay, so I lost $30 on Intel. It's okay. Intel earnings. I had a high credit on there, so it's fine. Disney, I don't think Disney options opened up yet, so I should be down some more money on this. Amazon, we're up. We're up on Boeing. We're getting some money back on Boeing. Yo, Boeing. If Boeing does go to 340 today, I'll literally die. I'll literally die. Let's see. I don't know. I keep saying I'm getting disconnected. I've been having some internet issues here. Shake Shack's up a little bit. Amazon, my Amazon credit spread is up tad, so just kind of chilling. So we'll see what happens. There we go. We lost another $70 on Disney due to that move. So we'll see what happens here. What I need though is some new positions on these. But anyways, guys, it's been fun hanging. Do me a favor, hit the like button. As always, stay safe, stay green. It's us versus Herd.